Hello, welcome to Sage GST 101 course. In this training, we will guide you through the fundamentals of GST. This is a basic guide on GST theories and understanding so that you can appreciate what needs to be said when you learn about GST accounting with Sage 50 and Sage UBS. Let us begin now. We will try to go at slower speed so that you can catch as much as you can. GST is a multi-stage consumption tax on goods and services. Business registered under GST is required to charge GST on the sale of goods and services made to its customers. This is called the output tax. Business is allowed to claim any GST incurred on its purchase of goods and services which are inputs to the business. The GST paid on purchase of goods and services by a business is called the input tax. At the end of the taxable period, business will need to file the GST return and pay customs, the net due tax, which is the output tax minus the input tax. GST is a self-declared tax to the customs. If in the event your output tax is more than input tax, the net GST is payable. If your output tax is less than input tax, then you will get a GST refund. GST is transaction-based, with multi-stage tax imposed at each stage of business transaction, which means from production to distribution of products and services to end consumers. How does it apply to your business? In multi-stage tax, which will apply throughout the supply chain of all goods and services as shown in this table. Transaction-based, applying each time a business makes a purchase of goods and services or a sale of goods and services. Payment of GST will be made by businesses throughout the supply chain, but it is ultimately passed on to the final consumer, which is the consumption tax. GST will not be a cost to the business and be reflected as an expense item in the profit and loss account, except for block input tax where the GST charge is not claimable. Scope of GST covers two aspects. The first one is supply of goods and services in Malaysia. Second is the importation of goods and services into Malaysia. A transaction definition within the scope of Malaysia GST if the following four conditions are met. Number 1, it is a taxable supply of goods or services. 2, it is made in Malaysia. 3, it is made by a taxable person. And number 4, it is made in the course of furtherance of the taxable person business. The term supply means all forms of supply done for a consideration including supply of goods and services, supply of imported services, and anything which is not a supply of goods is a supply of services. Please take note that supply is much wider in its application than the word sales or income. In order to be a supply for GST purposes, two conditions must be fulfilled. There must be a transaction between a supplier and a recipient involving the transfer of goods or provision of services. There must be a consideration from the recipient or any other person. If any one of the above conditions is not fulfilled, there is no supply for GST purposes. What is the term consideration used? Is anything received or to be received in return for a supply of goods or services, whether it is payable by the recipient of the supply or by some other third party. Does not necessarily have to be money, but capable of being expressed in monetary terms. Must have a direct link with the goods or services being supplied. Must be as a result of a legal relationship between the parties concerned so that one person is contractually obliged to pay the other. Okay, after some serious notes, let me give you a minute to read what you see now on the slides. Never mind, just kidding. Supply of goods include the following that I'm going to list. By way of sale, transfer or disposition without any consideration shall be deemed as a supply of goods. Exchange or barter trade, provision of land, gifts of goods to the same person in the same year for value of exceeding Ringgit Malaysia 500 for furtherance of his business. Where the value of goods is less than Ringgit Malaysia 500, it shall not be a supply. Transfer of the whole property, electricity, gas, water, refrigeration, air conditioning or ventilation. Transfer of business assets is a supply of goods. In GST context, there is no deeming provision as regard the supply of services. For example, where there is no consideration, there shall not be a supply for GST. There is an agreement to do or not to do something. Let us take an example. X has entered into a contract with Y to provide services. Halfway through the project, Y decided to abandon the project and inform X that it will pay an amount of money to X if X agree not to take any action against Y for terminating the contract. The payment that X received from Y is a consideration for X agreements not to take action against Y. Hence, it is a consideration for supply made by X and shall be subject to GST. Here are some examples of those that are not a supply of goods or services. Transfer of going concern, contribution to pension, provident or social security fund, supplies by any society or similar organization, supplies excluded from credit, supplies of goods or services under Islamic finance, insurance indemnity payment, and diplomatic and consular services. All supplies fall within 4 categories. There are standard rated for taxable supplies where input tax can be claimed except for block input tax. Zero rated for taxable supplies where input tax can be claimed except for block input tax. Exempt where no GST will be imposed on the supply and input tax incurred on the purchase will be lost as it is not claimable. And out of scope where no GST will be imposed. Place of supply is important as GST is charged on supply of goods and services made or supplied in Malaysia. Place of supply for goods is treated as made in Malaysia when goods removed from a place in Malaysia to a place in or outside Malaysia. Services is treated as made in Malaysia if supplier belongs in Malaysia. For example, the business or fixed establishment or the usual place of residence is in Malaysia. Time of supply determines the date when the supplier shall account for GST on the supplies made. Businesses have to account for GST based on the time of supply rule. In general, the time of supply is the date the goods are removed or made available or services are performed. This is the basic tax point. In situation where the invoice is issued before the basic tax point or payment is received before the basic tax point, then the earlier of these two dates will be the actual time of supply. However, in the 21-day rule, when an invoice is issued within 21 days of the basic tax point, then the time of supply is the date of the invoice, provided payment has not been received before the basic tax point. In transfer or disposal of business asset, time of supply is at the time when the goods are transferred or disposed of. Situation where goods appropriated for personal use or any other non-business use. Time of supply is when the goods are appropriated. For imported services, time of supply is when the supplies are paid for. In this example shown, the tax invoice was issued 16 days after the goods have been delivered. Thus, the time of supply will be 1st of June 2016. In this second example, where the tax invoice was issued 45 days after the goods have been delivered. Thus, the time of supply will move back to 15th of May 2016, where GST has to be accounted in the GST 03 return for that particular taxable period. GST is calculated based on the value of supply, and the value of supply for GST calculation depends on the nature of its consideration. Listed here are 4 types of consideration for your understanding. Cash consideration. The value itself will be the value of supply to calculate the 6% GST. Non-cash consideration. The open market value less GST inclusive to calculate the 6% GST. Importation of goods. CIF value plus all other charges to calculate the 6% GST. And importation of services, consideration paid to calculate the 6% GST. A person is entitled to claim input tax if he is making a taxable supply and meets these criteria. A registered taxable person, goods or services purchased are made in Malaysia and for business purpose. A lovable input tax has been incurred. Sometimes businesses purchase goods and services which may be used for both business and non-business purposes. The chart here illustrates the scenarios whether the input tax can be claimed or cannot be claimed. It clearly shows that input tax for business use and producing taxable supply will be able to claim. A GST tax invoice is required for businesses that provide taxable supplies. The information required to be disclosed include the word tax invoice, GST registration number of the supplier, name and address of the supplier, date of invoice, name and address of the recipient, serial number of invoice, the value of the supply, the GST amount, and the total invoice value, all separately disclosed. Take note that input tax claims cannot be claimed where claimant does not have valid tax invoice to show the input tax incurred. A simplified tax invoice may be allowed for value of purchase below Ringgit Malaysia 500, and the following prescribed particulars should be disclosed in the simplified tax invoice. The value of purchase, which is below Ringgit Malaysia 500, the word tax invoice, GST registration number of supplier, date of invoice, no requirement to put in the name or address of recipient. The parties mentioned in the slide shall be jointly responsible for the tax, penalty, surcharge, etc. in relation to the organization's responsibilities under GST. The said person shall be liable if the organization commit any offences under the legislation. Penalty clauses in the GST legislation are very stringent for non-compliance. Upon conviction, the directors or authorized personnel within the organization shall be subject to imprisonment. Therefore, it is important to ensure a full compliance by the organization. GST can only be levied and charged if the business is registered under GST. In determining the registration threshold of Ringgit Malaysia 500,000, the following supplies are excluded: exempt supplies, out-of-scope supplies, supplies of goods that are capital assets of the business, supplies of imported services, supplies made in accordance with the warehousing scheme, and supplies made between designated areas such as Labuan, Tioman, or Langkawi. As for voluntary registration, businesses below the threshold or business which have yet to make taxable supplies may apply for voluntary registration. Once registered, it must remain in the system for a minimum of 2 years. Business is not liable to be registered if its annual turnover of taxable supplies does not reach the prescribed threshold of Ringgit Malaysia 500,000. Therefore, such businesses cannot charge and collect GST on the supply of goods and services made to their customers. Nevertheless, businesses can apply to be registered voluntarily. In order to be eligible for GST grouping, the following conditions must be met. Each company must be making only taxable supply, standard rated and zero rated, and no exempt supply. The entities must satisfy the controlling criteria, for example, more than 50% shareholding. The group of companies must elect one representative to submit the GST return for every taxable period. There are advantages of GST grouping. For companies which are grouped, the supplies between the members shall not be subject to GST. Centralized filing. Only one GST submission for the whole group, and hence may reduce compliance and administrative costs. What are your GST preparations and what you need to do now? It is never too late to start with proper understanding on GST. It is important for personnel to have sufficient GST knowledge to make the necessary changes and preparation. Understand on GST required documentation such as tax invoice, GST 03 return, and so forth. Mapping of transactions taking place within the company. And check your calendar. Do you have sufficient lead time to meet GST requirements? You should also review the current process and procedures related to accounts receivable and accounts payable to understand your billing cycle and processing of invoices. For accounts receivable, questions are: do you issue invoice at month end? Do you receive cash upfront before delivery of goods or performance of service? For services, do you invoice upon completion of service or upon a percentage of completion or milestone basis? To comply to GST requirements, you may want to ask yourself this: are you able to issue a tax invoice within 21 days from the date of delivery of goods or performance of service? Are you able to issue GST compliance invoice? Establish a cutoff date for issuance of invoice every month. SAGE recommends that you consider change in the billing process to accommodate the time of payment of GST. For example, billing twice a month. Have proper internal controls to ensure invoice has all the information required to be a GST tax invoice. Review credit terms to address cash flow impact. For accounts payable, your considerations are: what is the cutoff date at the end of the month for processing of invoices from supplier for accounting purposes? What is the payment date for invoices issued by supplier? To comply to GST requirements, you may want to ask yourself this: do you want to review the invoices to ensure GST compliance before processing for payment? For staff claims, invoice to be issued to the company. Identify any input tax block on purchase of goods, services, invoices with mixed supplies for standard rated, zero rated, or exempt. Invoice from supplier not registered for GST. SAGE recommends that you have internal controls to establish that invoice received is GST compliant before processing for payment. Establish a cutoff date for processing of invoices at the end of each month. Change in the processing process of invoices and establish internal controls for reconciliation of invoices received after the cutoff date. For goods, list of products and assign tax indicator. For example, 1 is for taxable, 2 is for exempt, 0 is zero rated. Assign tax code for each type of supply and develop a condition table. For services, list out type of services or description of services. List out service provider. Identify type of expenses and services on which input tax is blocked, zero rated, exempt, and etc. Review pricing of products. Analyze the cost structure to identify any potential cost savings or additional cost of doing business and the impact on the price of the product or services. How about pricing of products? Are they GST inclusive or exclusive? As for the IT systems, it is most important to check: do you have software that can perform GST accounting? Do you have software that can issue GST compliance invoices? If no, then you really need to get a good accounting software. If yes, also what sort of information is required to be provided to the IT vendor? Finally, on GST accounting for GST return submission, you must set up new account codes for input and output tax and GST control account. Prepare monthly reconciliation of the output and input tax accounts to the GST control account. Prepare listing of all purchases, expenses, and sales from the IT system, including adjustments done for bad debts relief, credit and debit notes, reversal of input tax claim for outstanding payment to suppliers, and etc. Other important parts of preparation are to communicate with your suppliers and customers on GST ID of your suppliers, billing address, and to inform them the need to issue GST compliant invoices. Inform your customers that you will be invoicing GST on your supply of goods and services. Review of agreements to identify GST impact and renegotiate contract. For the review of contracts and agreements, you need to have appropriate clause on GST to be incorporated into all contracts for supply of goods and services on an going forward basis. Review of current long-term agreements that involve supply of goods and services after 1st of April 2015 to analyze the GST treatment to be applied in relation to the supply of goods and services. To address from a commercial legal perspective, which party has the liability to account for GST when goods are damaged, destroyed, or lost. For documentation and record keeping, all records must be kept for a period of 7 years. How about the HR policies and procedures? You need to review contracts of employment and HR policy to identify all forms of benefits provided for staff and identify appropriate GST treatment. Identify benefits that are provided in practice but not documented in contracts and HR policy. Review of staff claims, procedures and processes to ensure input tax claim is validated through proper documentation. It is very important to test out your entries in the system to ensure readiness. You will want to do it early and keep rectifying until you are satisfied with the output. Lastly, the golden question. Have you registered for GST? Please do so before 31st of December 2014 to avoid penalty for late registration. If you have done all the above, congratulations, you are now considered ready for GST. We have come to the end of Sage GST 101 course. It is just a beginning, and we hope we have enlightened you with the best knowledge moving forward. For more information on other training courses, browse to www.sage.my. Thank you everyone, and bye for now.